Hey guys, this is my evening video. Please like my video if you like it. Follow me on Gumby9662C on Twitter. Please retweet me if you get a chance. I had a lot of views on my last video, and I didn't even put it posted on Twitter. So I must have did something right on that one. So basically, to follow through what we got going on here, we're bouncing off of very, very critical support. So basically, the wedge formation that I've got drawn out here, uh, this was the last PPI numbers that came out. So the bottom, what I did, I anchored it off the price right before the numbers came out, and then that's acting as support. And then right after the numbers came out, that's the top of our wedge formation. So that's what we got going on here. Friday, we got PPI again. Okay, so we're 3 days out here from PPI numbers. And basically, we're just putting in a big megaphone formation and bounced off critical support today. So this could be a viable dip. So be very mindful here. You don't really want to press your shorts. This could very well be a viable dip. So, you know, be very careful on that. So that pretty much sums that up what I'm looking at here. So guys, I like using Fibonacci retracement to give me a pretty good picture of how price actions were interacting to major time periods in the past. And so basically what I got going on here, I'll start with the blue Fibonacci retracement here. That represents the high of the week so far since OPEC Sunday night to the current price low. That's the current price action for this current week. We came all the way down to the market maker move low for the week. So our expected move for the week, we've actually came down and tagged it already this week. Okay, coming down to the bottom of our wedge formation. Okay, and so we did manage to tag our bottom end of our expected move for this week so far, which could very easily hold. So we do have a technical reason for it possibly to hold, and they market makers did not expect us to go any lower than that to break out of that wedge this week. All bets are off whenever it coming into the end of the week, so we'll see what happens. But that's the first fib that I got going on here. Now, the pink Fibonacci's right here. So basically, Powell came out last Wednesday talking about uh, possibly uh, slowing the rate of increase in interest rates. So this is the range that we rallied off of that news. Okay, and we're still actually currently trading below that here in the post market session here. Okay, we're not even in pre markets. It's 10 o'clock at night here. Okay. Okay, my next one I want to show here. Uh, uh, this is our previous week high and low. Okay, this is from last week. Okay, so we're inside of last week's range as well, the bottom end of last week's range. So basically, we came right into the rate decision. Okay, and we just rocket shipped right off that. So basically, we are just basically right into the bottom of that range again, currently trading into the bottom of that range from last week, the very bottom before that rate announcement. Okay. Now, and then let's see here. What else can I show you here? Uh, yeah. Okay. This here. One second here. Okay. I changed my view a little bit. So the current cycle from high to low that we are trading against, the high to low cycle that we're currently trading in, that is the purple. Okay, Fibonacci retracement. Okay, we're currently um, we're below the 38.2 of the current cycle, so the very low edge of the range. Okay, with the 23.6 being all the way down here, 38.75. Okay, so basically we're basically trading in between these two ranges here on the current cycle that we're currently in, the bigger cycle that we're looking in. And then the previous cycle before that, okay, uh, excuse me, uh, it was lower. The previous cycle and that was lower than the current price action we're at. So we are above the 50% of that cycle. Okay, so we're below. We rejected the 61.8 from that previous cycle, but we're still above the 50 of that previous cycle, suggesting that the 3913 area, 3900, 3913, this is probably a very strong support area, which we basically really came awful close and already have achieved that. So be mindful of that. So that's my quick rundown on SPYs, what's going on here, what's driving price action and stuff right here. But yeah, this like I said, this megaphone is what we're trading against right now. So be very mindful of that. Okay, and in our trading here. So other things I was looking at, basically most of the stuff that I told you yesterday to be mindful for, XLY, it continued, it broke down, as I said. That's XLF. It had a continuation. It was a broken chart pattern. And then we had XLE. Both of those were leading, continuation, breakdown pattern. If I want to go out here in a bigger time frame, let's see if we're even close to supports. Really not supported here. Well, yeah, maybe. You see this high right here. Let me go back a bigger time frame. 4 hour. Okay, yeah. Okay, we might be putting in a breakout. This has never been tested before. This back testing this breakout. So we might actually be putting in a possible support on XLE. How about XLF? XLF. Okay, let's see here. Okay, we had a breakout right there. We actually broke down even further here for XLF. So this is pretty darn ugly here. So basically now we think this suggests to me that financials may not be done. So you're probably going to have to be coming all the way down now. To these supports. We have a support right here. Yeah, there's still a lot of damage here. $34 basically here on XLF. XLY broke down today. I mentioned it last night. XLY, we broke out of the regression channel, came down. We've got a double bottom formation basically in place here. That could be supported here. Could be. Let me point that out. Could be. Our primary trends, though, are much lower. Okay. So this is not really, it has minor support. Okay. So to be mindful of that as well. Let's see here. What else can I talk about here? Dollar Dixie. Had another video here. I was looking for an inverted head and shoulders pattern. It's kind of playing out like I thought it would. I was looking for I was hoping when we come up here and tag my circle. We didn't actually do that yet. Still showing a lot of strength here. We could actually be coming up into that zone tomorrow. So we'll see. We do have a tested resistance. We're fighting that right now. So if and when we accept prices above that, it can start taking off pretty quick here. So we're fighting this proven resistance right here. So you have the dual crossover that acted as resistance. We're trying to resolve above that here on that. Okay, looking quite possible that we'll be doing it tomorrow, so be mindful of that. And then to finish it off here, the ZNs, because I think we've hit a major inflection point here for yields. I just don't think they're going to keep yields much. I really don't think yields are going to go in lower into the rate decision next week. I think next week's the Fed's actual announcement. I just don't think you're going to see it not in a rate hiking scenario. So what I got going on here, we're breaking out of our fib circle. Okay, this kind of looks like the trend that we're currently in here. We've looked below once. Now we're trading outside of it. So tomorrow it looks like this will be the first opening print away from my fib circle. So this really looks bearish for bonds to me. So we'll see what happens. I mean, it doesn't. They don't have to do it like I want, but it does seem to be quite bearish for bonds, suggesting yields will have a bid tomorrow. So, I'm still leaning to the bearish side in that regard on the bonds. But they could just hold us sideways here, waiting for the PPI to come out Friday morning. So I do definitely want to keep that. And we just basically base down here at the bottom of the megaphone formation here on ESs, and that could be a very uh, important theme going on here. IWNs is getting destroyed. Remember, IWM and XLE are heavily weighted on the IWM. So, or XLE and XLF are heavily weighted on the IWM. Basically, we got down here. There's just really no reason, in my opinion, at this point, that we are not going to be coming down here and retesting these primary supports here. Uh, so just keep that in the back of your mind. We have a broken regression channel. Uh, we just might have to wait for that news to come out later this week. And in the Qs, I actually traded the Qs and I traded Boeing puts this morning and got out early, and I was working too. So, but basically, what I got going on here on the Qs. So basically, when I see these crosses on these uh, circles, I look at those as a support area, these potential crossing areas. So that's another thing. I've already, so that suggests to me that the bond markets are probably going to be stable overnight, or maybe into the end of the week, and it might be supportive of some of these technology names. So let's see what happens here. I mean, there's a lot of ebb and flow going on in this market, but we have tested, came back down to major support, and we've hit it multiple times. You know, uh, this one here is not really a megaphone. It's just a rectangle. Okay, so we've been going highs, lows, highs, lows, but look at how many times we have been hitting the bottom of the rectangle here on the Qs. So that is something to be mindful. Just how many times the Qs are testing the bottom of their support versus what we're seeing in uh, the S&Ps. Okay, so be quite mindful. The more times you hit it, eventually it's likely to break. So be mindful of that. So uh, if that were to happen, you have to definitely keep that in the back of your mind. So, okay. Thanks a lot. 12 minutes, even longer than last time. I apologize.